Compound interest is not the end-all be-all, ladies and gentlemen. In this video today, we are going to talk about why compound interest is currently failing you. My name is Carmen.
And I'm Darius. And when it comes to compound interest, we are really big on this when it comes to infinite banking. But here's the thing. Compound interest works on the back end. So a lot of times we put all of our faith in compound interest when it's not necessarily the best thing for us at this very moment.
Exactly. Sometimes we just have the preconceived notion that we just need to let our money sit. And that's not at all what we talk about on the Wealth Nation channel. It is never, ever about letting your money sit and you not doing anything. Because this day and age, we understand that money has to keep moving in order for you to generate cash flow. So in this video, we just want to continue to hit home the importance of compound interest, but making sure that you're not just relying on that, because you need to create means of cash flow in order to sustain your retirement, in order to sustain your lifestyle, or just accomplish whatever your financial goals are.
Now, that's the thing right there. You said retirement. A lot of times what we do, and I even say what I did, was we put all of our money aside for retirement. We put it into our 401ks. We put it into our retirement accounts that's invested in the stock market. And we say that in 30 years, this is going to be ripe for the picking. And it's going to take care of our retirement moving forward.
How do we do that? How does that even make sense?
Well, it makes sense. It makes sense because it's easy. It's easy to give up control of our funds. It's easy to set that aside because that's just what we've been conditioned to do.
And it's easy because everyone else is doing it.
Right. Now, what we should be focused on is the cash flow aspect of it. Compound interest is amazing. We earn compound interest in our life insurance policy, but that's not the only thing that we're doing in order to make sure that we are good moving forward.
Absolutely. So again, in today's video, we just want to break down how this whole process works, making sure that we're on the same page, because again, you know, these are things that we say all the time on our channel. Is just, it's not all about the policy when we're talking about infinite banking. The policy is just a tool for us to park our funds, but really the big picture, the things that we need to be thinking about is what are we doing with the cash? And so the whole reason why we say compound interest is failing you is because, again, if you're only thinking about my money inside the policy and it's going to sit, then we're doing ourselves a disservice.
Yeah. And, you know, my inspiration for this is the fact that my mother is retiring. She wants to retire this year. Now, we are currently in a recession. Is now really a good time to retire if your retirement is the only thing that you're thinking about, because you just lost a lot of money when it comes to the stock market, and it may not be the best time for you. So what I think about when it comes to retirement or compounding is I'm thinking about my mom. My mom set aside funds every single check faithfully for 30 years. She set aside the taxes. She forgo paying taxes on it so she can pay it when she's retired. Hopefully she's in a lower income bracket. Now, one thing, you know, just to kind of trail off, is the fact that we're getting ready to have another stimulus check, right? Possibly.
We're on the
we'll
street.
Have another stimulus check. Now, how are we going to pay all these bills unless something happens with taxes? Who knows? We don't know. But the thing is, there's no crystal ball. Like, we don't know how much taxes we're going to have to pay in the future. So why risk it?
Yeah, and it really just breaks down to understanding what you're doing with your money, because like Darius was saying, with retirement, or even with investing, you need to know what's going on, because all of the risk really lies on the individual, right? There really isn't any risk until the individual gets involved. And it's really based off of your knowledge level to determine how successful you're going to be in your retirement or in investing. I hope you guys hear me on that. So if anything, what we're talking about with retirement, we're taught to park our money for 30 years, right? Put it up, pre-tax. You don't have to pay any tax on this money. And then it's going to somehow miraculously come because it's going to be also invested in the market, possibly, depending on whatever product you're using. And then after the 30 years is done, now you're going to be taxed on all of that money that you have been saving for 30 years. Congratulations, welcome to retirement.
Yeah. Now here's the skinny on compound interest is the fact that the money has to sit. Yeah. Money never just sits there. Mm-mm. Like even when we put in the stock market, when we put it into our bank accounts, our savings accounts, and we earn interest on it. When we talk about putting money on in our life insurance policies, yeah, we earn compound interest, but in order for us to earn compound interest, that money has to be moving. Somebody has to be managing that money so that we can earn more money.
Creating the interest.
The interest. Mm-hmm. Mm-hmm. So that is great. That's great for us, but we can't rely on that. That's just a perk.
Exactly. Yeah. So again, going back to just really understanding the compound interest factor of it, true compound interest has to sit in order for it to work. So if you have your money in a savings account and you pull from the savings account, the compound interest is now you're starting that all over. If you have money in investments and you're getting some sort of compounding, the minute you touch it, the compounding is done. Mm-hmm. So the reason why we like using whole life insurance, for example, is because when you put your money into a policy, it is going to earn a guaranteed compound interest rate. The difference,
as long as you don't touch it.
Withdraw. As long as
you don't withdraw it.
Exactly what I was getting to. Exactly. So as long as you don't withdraw the funds, meaning take the funds out of the policy and you get loans against your policy, your money is going to continue to compound for you, regardless if you use it or not. Mm-hmm. So it's an amazing, amazing feature to have a whole life insurance policy that is earning compound interest for you so that you can keep your money in a place that's going to continue to generate returns.
Now, in the meantime, what you're going to be doing is earning cash flow.
Yes.
Cash flow is the name of the game. Mm-hmm. When we think about what the banks are doing, what are they doing? They're trying to earn cash flow. The reason why we get loans and the reason why we go into debt, why the banks allow us to go into debt is so that they can create cash flow, cash flow, cash flow.
And if you didn't hear him, cash flow. So as we have parked our money snugly into a whole life insurance policy, again, the question now becomes, what are we doing with the funds? And the funds we should be getting loans and obtaining interest in other vehicles by either investing in intellectual property, whatever it is that you're doing, you need to be creating cash flow. Mm-hmm. Because like the banks, like Darius said, let's break this down again, right? We're all about becoming our own bank or becoming our own source of financing. So where is the blueprint for this information? Right down the street on every corner. And I'm referring to a bank. So how do they keep their doors open? Banks keep their doors open in two ways, really. Deposits, because every time you get paid, you're putting money into the bank's hands, literally giving them an unsecured loan. Mm-hmm. I don't know if you do that or not. A deposit is an unsecured loan. And then the second part of it is a loan. How many of us have credit cards, car loans, mortgages, personal loans, whatever the case may be? The banks are creating cash flow by saying, hey, we're sitting on all these deposits and not everybody is coming to collect on this money, so we can lend it to you with a little bit of interest and you're going to pay us back. That's exactly how they work. So why shouldn't you work the same way?
Now, how we should really work is we should be creating cash flow through the things that we are good at, because a lot of people think of cash flow as investing
flow, yeah. Mm-hmm.
in the stock market or giving someone else our money in hopes that they can do something with it. Mm-hmm. What we should really be considering for cash flow is what can we do ourselves?
Yes.
What type of activity can we perform for someone else to get that return of value, mm-hmm. so that we can create cash flow for ourselves.
Exactly.
Because the whole idea of everything that we do is control. Whoever has control, they're able to make the rules. Let's think about when we put money in our checking account. We just went to the bank today and we can't get access to our own money because we want too much of it. What sense does that make?
Not at all.
Not at all.
It continues to prove that they don't have the funds on hand.
Right. So when it comes to thinking about creative ideas to generate cash flow, you have to look within yourself and take inventory of what it is that you do. Because at the end of the day, it does not take money to make money. The best opportunity you have if you don't have any money, because you can create it. It takes creativity to make money. What you have to do is think of a way to add value to someone so that in return for the value that you add, you are able to earn money. So let's really think about the creativity that we can provide, because this is something that we need collectively, is for you to be creative.
Amen to that. So go ahead, just because of this knowledge that Darius is dropping, go ahead and give us a thumbs up on this video today if you're with us. And again, I just want to continue to build on what Darius is saying, because in this day and age, you know, so many people have lost their jobs. So many people have lost all of their resources. So really at this time, we got to get creative, y'all. We got to roll our sleeves up. We got to figure out what knowledge do we possess that can be monetized. Because like Darius said, it doesn't take money to make money. No. And whoever told you that is lying, because it takes creativity and it takes resourcefulness to make money. Think of all the people that are out there in the street flipping a buck. They probably didn't start with anything, as you hear with a lot of business owners. A lot of successful business owners were homeless, didn't know how they were going to get started.
Working out of their garage,
Amazon, Apple, things like that. So don't ever sit here and assume that you're down and out because you don't have the money to get started.
As long as you have a brain working in between these ears, you have opportunity, because we live in America. There's tons of opportunities surrounding us. The only thing we have to do is just look and see what other successful people are doing.
Thank you, Patrick. Thumbs up, everyone. Yeah, so it's really, again, kind of going back into this. We're talking about compound interest. There's two pieces of this, right? So we need to put our money in a place where it's going to keep up with inflation. If we're assuming inflation is like 2%, right? So if our money is going to keep up with inflation inside a policy, now we have bonus points available, because we can continue to earn the compound interest inside a policy as long as we get a loan, and now we can leverage that money to make money. So that's why today we're talking about, what are you doing besides just sitting on your cash? Because a nest egg is no longer the sexy thing. Right? A nest egg was something that our parents strove for, which was retiring with a stack of cash. And right now that's not ideal, because what happens? Think about this. This is very visual. You know, you go 30 years, I talk with my hands a lot, right? So you go 30 years and you build up this whole stack of cash. Now you're in your 60s, maybe you're in your 70s, who knows when you've retired. And every single month, what are you doing? You're depleting that stack of cash, right? Because you're not creating what? Cash flow. Right? Now, every single year, that's why these retirees are so worried about outliving their retirement. Why? Because they're not creating cash flow, because they're depleting their nest egg. They spent their entire life saving all of this money, and now it's gone.
Yeah, and let's think about 30 years ago, what was inflation like? Was taking into consideration inflation.
Yep.
Because if every year, let's say inflation is 1.5%, 2%, every single year we're losing 2% value on every single dollar. Yeah. So not only do we have to worry about inflation, we have to worry about the fact that every time we go and spend our money for our lifestyle, we're depleting it.
Yes.
Without it being replaced.
You're
so
right.
Who wants that stress on them?
Not me.
No. But we have the ability right now to start thinking about how we can generate opportunities for cash flow. And you know what? For us, the first thing we thought about when we initially got started, which is why we were involved with real estate, was the fact that, okay, if the most successful people are doing real estate, then we should be doing it.
Yes.
But what we learned is that wasn't a calling to us. You have to find out what's calling to you.
Yeah.
Because the best opportunity you have to create cash flow is something that you're passionate about, and something that gives you the ability to create value for someone else.
Amen. Because you never want it to be a chore, because at the end of the day, you just bought yourself another job. So it is very important that whatever you are investing in or whatever you are into, in order to create cash flow, in addition to the compound interest that you're earning, is something that you enjoy or something that you have an interest in. Because again, like I talked about earlier, the risk comes involved with the individual. So if you are not into researching whatever it is that you're doing or really understand the investments and how money should be moving within the investments, you are the risk, right? It's not the investment, it's yourself, because you don't understand how this investment or how this cash flow should be played. So that's why we always say, get involved with something that you have knowledge in. And also think about this. This is something that we talked to an individual about. He's spending all of this time educating himself on a subject that he knows nothing about, but he has all of this amazing talent in the music industry. And he can teach, he can play, I think it's like 6 instruments or something, and yet he's sitting here trying to learn about real estate. And we're like, boy, if you don't go teach some music lessons, if you don't create an online course and teach people how to teach the piano, everyone is home these days. I'm sure the kids need some help with some piano lessons. The parents would love it. You are sitting on a gold mine of knowledge, but we just underestimate the information that we have inside our brains. So that's why we're saying, think about the things that you currently possess. What is the knowledge that you have right now? Because if you're not monetizing this knowledge right now, you're probably wasting your time, because you're going to try to study something that you don't know, when really we have all been paid for our knowledge that we currently possess. So we are challenging you. I'm challenging you guys. Stop studying stuff you don't know, and just yet initially, right? I can hear the comments now. Well, let me make sure I clarify what I'm saying. Right now, today, in order for you to be resourceful, use the information that is inside your brain right now to create cash flow. And then build on it. Go study a different subject. Go learn a little bit more. But what I'm saying right now is, if you need money, you better figure out what you know right now and go monetize it, because that's what you can start doing and take action on tomorrow, today, right?
Yeah, what's 10 times worse than wasting time is, what's 10 times worse than wasting money is wasting time. Because it's something that we can never get back no matter what we do.
Exactly. Yeah, so I was moved to say that, because we just have so many people that we come in contact with that are talking about all of these plans that they have. And we just know that they're sitting on amazing information that is so valuable to everyone these days. We all have gifts, we all have talents, and sometimes we just don't realize how important it is to the next person.
Yeah, absolutely. Because right now, every single person on here is watching us through some type of device that they paid for through a service that they provided for someone else. So let's think about how you can maximize that, or focus on that, so that you can create more of it for yourself. Because, really at the end of the day, small businesses are on a decline. That means that we are dependent upon these larger corporations in order to help us maintain the lifestyle that we have. And what that's doing is that's stifling our creativity. Because what we do is we become a specialist in something that benefits the company more than it benefits us.
True.
And the reason why I know that, the reason why I feel so deeply about this, is because in the occupation that I had as an engineer, my job was to understand the value of a person to how much it is costing the company. In every single company that I work for, we value people at 20% of the value that they provide for the company. So we're literally paying people 5 times less than what they're worth. Now, if you can do this on your own, you automatically start earning 5 times more than what you're currently making. And for me to see that so many times, it was one of the reasons why Carmen and I, why we decided to take the chance and start working for ourselves. And right now it seems hard. It's hard to fathom, doing something on your own, but you have to do that. You have to, because people are looking for the services that you provide. People can connect with you more than they connect with a large company.
Yep.
Right.
Yep. And it's so true, because the other part of it is, when you're thinking about someone else controlling your income potential, Oh, that can make you a little upset, can it?
Yeah.
When you think about that. And so with Darius, with the experience that he had, it was really amazing for him to come home and, vent and tell me some of the things that he had encountered every day, and realizing like, wow, the bottom line is real when it comes to companies.
Yeah.
And we don't realize it because we're so happy to have that job because it's going to pay us every 2 weeks.
Or because it's some large brand, it's some well-known brand. Like, who cares?
Yeah. But again, it's just that the things that we've been taught in the programming that we have. So don't ever let anyone control your income potential. Don't ever let anyone stifle what you can bring home to your family, because really it's in your hands. You have the ability to make as much money as you ever can imagine, as long as you're willing to put in the time and the effort.
Right. And back to the whole title of this video is the fact that, compound interest, you earn compound interest. It works the best on the back end. So compound interest works the best after 30 years, for example.
Meaning it takes time for the compound interest to build up. So that's why we keep saying, whenever you get a policy, you don't just focus on the numbers and focus on the cash value that you see in front of you, because that's going to happen regardless. It's on autopilot. What we need to be focusing on is, what are we doing with our banking system? What are we doing to create cash flow? What are we doing to increase our income potential? Like Darius is saying, we need to start strategizing and really get in the driver's seat of understanding how we are going to solidify that retirement, if you choose to retire, or just your everyday lives. Because how many people would be happy with another $500 a month, another $1,000 a month? We're not talking about huge numbers here, but we're just talking about a lifestyle change and a little switch in that mind of understanding how you can literally bring money back to your household without even realizing that you had the ability to do so in the first place.
Yeah, and it doesn't. And let's think about this: if you can make $1, you can make $1 million. Honestly, if you can figure out a way to make $1, then you can make $1 million.
Yes, absolutely.
The whole system that we are plugged into is designed to make us dependent.
Yeah.
Don't let yourself be dependent on someone else for a paycheck. Don't let yourself be dependent on someone to grow your money for you. Don't be dependent.
Yeah. Yeah, and I'm so glad that, again, powerful nuggets coming from Mr. Britt over here. It's really powerful. Whatever you can dream of, it can happen. So if you know that you can go out and make $1 yourself, go make your own hard-earned dollar, you can do that 10, 20 times over. So it's really important. Again, start challenging yourself. Start thinking about, what are the ways in which I can gain cash flow? What is the knowledge that I currently possess today that can serve someone else? It could be gardening. It could be, like I said, music. It could be financial education.
It could be cooking.
We're sitting here talking to YouTube live about the information that we know about money. And it's serving people because people are looking for this information. So the minute that you can tap into that skill or that piece of knowledge that you have and know that it can serve others, it's going to change your life.
Yeah. And just out of the corner of my eye, I saw a question about, does this plan have fixed equity index? We're not talking about any plans. What we're talking about is you generating cash flow from your own thinking, your own creativity.
Yeah, but just to clarify, if you're talking about the policy that there is no investing, it's just a simple whole life insurance policy with high cash value that provides a guaranteed return and doesn't mimic the stock market.
And it provides us compound interest, and it's great. But the point that we're trying to make in this video is the fact that don't just let that be the end all be all. That's a perk. That's not going to save us. What's going to save us is cash flow.
Yes.
Utilizing those funds to generate cash flow for ourselves. Best investment you can ever make is an investment in yourself, so that you can use that knowledge to generate cash flow. Right,
because the whole name of the game is infinite banking. We didn't call it the infinite policy. We called it infinite banking. Not we, Nelson Nash, for example. So it's all about banking. What are you doing with your banking needs? Sometimes people just get caught up in, well, I don't have debt, so what do I do with my policy? Well, I don't have any investments, so what do I do with my policy? So again, what is banking about? And banking is about every single time you swipe for a transaction. I don't care if you're buying Starbucks or if you're buying the next best investment. It's all about what are those transactions and how can you control some of those transactions within your own system. So it doesn't matter if it's debt, it doesn't matter if it's creating cash flow, whatever it is, it's transactions. You should start thinking about all of the transactions that you're making on a monthly and an annual basis and try to figure out how you can start controlling some more of those transactions within your own household.
Yeah, and if you don't have any debt, you just have your money sitting in your bank account, then congratulations, the banks love you because you are funding their cash flow that they're generating by providing debt to someone else.
That is so true. If you guys are still with us, go ahead and hit that thumbs up button. Thank you so much for hanging out with us. We're going to take some of the questions in just a moment. But if anything, again, we just want to make sure that we hit home the point today, which was the title of the video is basically compound interest is failing you. And we say this kind of cheeky to say in the sense of if you're just relying on putting your money up on a shelf and not doing anything with it,
you missed the point.
you missed the point, because what we're talking about is using a tool that provides compound interest so that you can then leverage that tool to create cash flow.
Yeah, and we're doing the exact same thing the banks are doing. When it comes to learning or understanding anything that's related to finance, ask yourself, what would the banks do? Now, you have your money sitting inside your bank account, and the banks take that money, your money, and they lend it to somebody else for some type of debt.
Exactly.
And then they earn cash flow on that. You don't earn any of it. Now, we're doing the same thing when it comes to a life insurance policy. We have our money earning interest inside of our life insurance policy, and we borrow from the life insurance company to use our funds for cash flow.
It's so true. All right. So with that being said, let's jump into some of the questions here. We just love the engagement that we get from the live. So thank you guys again for hanging out with us. And also, if you are new to the Wealth Nation channel, in the description below, you are actually going to see a link to our masterclass. So definitely make sure that you check that out if you haven't done so already, because it's going to break down the infinite banking concept for you, show you how you can use the money inside the policy to apply into your lifestyle, and then just figuring out, what do you do from there? So go ahead and check out that masterclass so that you can continue to educate yourself on what we're talking about.
So for eye candy, you're both under 59 and a half, way under 59 and a half. I just had a birthday, but still way under 59 and a half. Did you get your money out of your 401k or just stop funding it? Well, both. Yeah, we haven't had a 401k in years because once we realized the game, then we started using the game in our favor.
Now, again, we are not tax professionals or retirement professionals, so you need to consult with your professional. Putting that disclaimer out there.
That's just what we did.
Yeah, we're just telling you what we did. I withdrew the funds out of my 401k when I was in between switching employers, and we just used the funds to start a policy at that time. And then with the other account, we just stopped contributing to it and used those funds to also apply to a policy. So just to share with that, thank you guys again for the love. Good evening. Hello. We think you all are the bomb as well. Okay, so let's see. I pray all is well. Thank you so much, everyone. Cash flow is king. Creative minds, thumbs up. Okay, what else?
Patrick Joyner, I have interest in financial stability and retirement. Yes, that is very important. If you have an interest in financial stability and you're good at it, then just start talking to people. Start spreading your knowledge and what you know and the creativity that you're using to put yourself in a better financial position.
Why not?
Thanks a lot. I need to speak to my current employer about a raise. Yes.
You should. Thanks a lot. Absolutely. Okay. What bank not letting you access the funds today? What do you suggest as an alternative way to store your income? So iCandy, for example, we went to the bank to get, let's just call it $5,000. Again, not a lot of money in the grand scheme of things. We're not talking about millions of dollars, but we were told we could get half today and half in the next few business days. So, when you're a business owner and you need to fund expenses, you need to get some stuff done, and the bank is telling you, sorry, we have to order the money. That is a little frustrating when you know that the money is right there in the bank account.
If I got $50K in my account and I want 20 of it, I should be able to get it right then.
Or you should be able to get all of it.
Yeah, all of it, yeah.
And not be told, sorry, we have to order money. So, and this is just with one particular bank. We've run into this before with other banks. It is what it is, ladies and gentlemen, but we're sharing this with you because it's important for you to understand that the banks don't have the money on hand. Just because that you log into your bank account and you see the money there doesn't mean that it's next door or on the corner waiting for you. Because why? The banks are constantly moving money, and they're not just going to let the money sit in the bank because it's costing them money if they set on everyone's deposits. So again, check out our masterclass because we talk about that even in more detail about how the banks work.
Yeah, the same rules that apply to us as far as like having our money sitting and not keeping up with inflation. Banks really understand that. That's why they have to keep their money in motion, and it kind of follows the sun around the world.
Yes. So other alternatives for parking your money just happens to be a whole life insurance policy. Go figure. So we use whole life insurance policies. Of course, we can't replace the banks just yet. So we still do have checkings and savings accounts. But just so you know, maybe in the future, we will have a solution.
Let's see. What's going on, Robert, Raymond? I can't pronounce the name. Kimya. When you borrow against your policy, does it show up on your credit report? No, it doesn't. It doesn't show up at all. Your policy is a personal contract. Well, with the mutual insurance company, it's a personal contract between you and the insurance company. So that's nobody's business how much money you have or what you do with it. So when you borrow money, nobody knows about it, just you.
Exactly. So Mr. Randall saying he has an appointment with us to meet with one of our agents, our brother from another mother. He is going to take great care of you. Okay, let's see. What else? I'm new. I've watched the master's class. Great stuff. Thank you so much. Is there a point to where you no longer have to pay a premium? Good question. Well, let me ask you this, Mr. Randall. Jay, do you ever want to stop receiving deposits? Do you ever want to stop receiving deposits into your bank?
Yeah, let's hypothetically, you have a bank. You own a bank.
Let's think about that.
You own a bank. When do you want to stop receiving deposits?
No. And I'm asking a serious question. This is for everybody here, because what I'm asking this question so that we can think about our premium payments differently than how we're used to thinking about them, right? And the reason why I'm saying that is, again, when we think about premium payments, we're thinking about a payment. We're thinking about a withdrawal from our account. We're thinking about an obligation that we have to pay, right? And instead, what we're doing is we're creating a banking system where the more we fund it, the more money is accumulated for us to be able to then leverage to do whatever we want to do. So I'm answering your question with a question is, when do you want to stop paying?
Now, what you said is interesting because one of the questions we have from Westside Transport is the 1090 versus going with the 4060. And it says that, well, we favor the 4060s.
Yeah.
And one of the examples we did in our Patreon page where we actually had a whole set time where we talked about this is real quick. 40-60 split, 1090 splits. Is basically you're doing all the work with your cash versus you allowing the insurance company to do the work with their interests. So when it comes to a 40-60 split, you have to look at how much money you have at a certain period of time. So in the example we did is we had $180,000, which we funded the policy up front because we were doing the 1090 splits. And then we had where we had the cash value of $180,000 at the end of like 30 years. Now, the thing is, at the time that we had the $180,000 on the 40-60 split, we put in a lot less money. So I know that was really quick. Check out the Patreon page where we discuss this in detail because it'll give you a lot of perspective on what that looks like, because we actually use one of our policies. Yeah,
we put them side by side and just showing you how much you're putting in on each one and what the ratios are. So again, it's kind of up to you. So we favor the 40-60 split because we don't have to do as much heavy lifting. We don't have to inject as much cash into the policy because again, the policy is going to do its thing regardless.
Yeah, what's really important is what we do to create cash flow.
And going back to Mr. J, if you haven't figured out that answer yet, basically the answer was you never want to stop stop paying. I would assume you don't want to stop paying your policy because the more money that you put into it, the more cash that you have available.
Yep.
So really good question. So that's why sometimes when you look at like 10 pay or 20 pay policies, if you see those, you have to stop paying after 10 years. You have to stop paying after 20 years. You can no longer add any more funds. So what does that mean for your banking system?
I personally really like a 10 pay policy if somebody else is paying it.
Of course, if someone else is paying it, they can take it.
Yeah. Put $100,000 into a 10 pay policy for me that I benefit for the next 10 years, and I get all the cash value and the growth. Sign me up.
That's nice. Can I contribute any amount to get started with a whole life insurance policy?
It depends on your age and health.
Well, and any amount that you can afford, right? So don't just write $1 million check and then not show up next year. So make sure that it's an amount that you can afford consistently on a consistent annual basis.
Yeah.
And again, the insurance company is a business. They're not going to argue with you if you cut them a large check. Okay, let's see what else. I have spoken to Mass Mutual because of you guys I've spoken to a Mass Mutual agent because of you guys. Great. Good luck with your policy, and hopefully you're able to get that started. Can you direct deposit to a policy? No, you can't direct deposit, but you can create automatic payments. Yeah. Just to clarify. Hey guys, I signed up with you a few months ago. I came on 12K a year policy. Question is, how do I circulate my cash flow through IBC when I'm only getting half out? Good question. Okay, so if you started a policy with 12K and you're saying you only have half out, what are you doing with the half? So that's kind of what we're talking about today, is you always have to circulate the money, because when you buy a policy, there are two parts of this policy. There is the cost of insurance, and then there is the cash value. So with you, when it comes to the cash value, is, do you have any financial obligations that you can take over with the cash value that's inside of your policy? So debt could be one thing. If you don't have debt that you can take over, then what are some maybe bills that you could take over and redirect back to your policy? What are some investments or cash flow opportunities that you can start investing in order to bring some cash flow back to you? So it's all about just looking at your crystal ball, looking at your current economy inside your household, and determining, what am I going to do with this money so that it's not just sitting?
Dee, I'm using it as an emergency fund, but I invest in real estate and the stock market. Mm-hmm. Perfect. That's what you're using your funds for. Use your funds to help mitigate the risk when it comes to the stock market, because if you lose it, you don't technically lose it. It's still earning you interest. You have the ability to replenish it. And real estate is also a great opportunity, because when you're investing in real estate, that helps provide cash flow for you.
Mm-hmm. Yeah. So just making sure, Dee, that you are making your money come back to you, mm-hmm. because that's the other thing about infinite banking, is sometimes people just send the money out, but they don't bring it back. And that's another thing that can break your system, because we're all about recapturing the money and bringing the money back. So if you are investing in real estate, or if you're investing in the stock market, you need to make sure that money is coming back to you, and we're not just throwing it out and hoping that the money's coming back. Because again, the banks are lending money out with collateral. They're getting a guaranteed payback. So the money is going out with a guarantee that money will be coming back. So just make sure that you keep that in mind for your banking system.
Yeah, and just an idea. One thing we did when we were investing in real estate, Dee, is the fact that we lent money out to real estate investors. We got first position on the house, mm-hmm. and we earned our money back plus interest. And in the event anything happened with the house, we knew what to do in order to fix that house and flip it and make even more money.
Amen to that. So Ross says, if I own a bank, I never want to stop receiving deposits. You get what I'm talking about, sir. And Raymond Nelson Dash said, don't steal from yourself. Exactly. Don't
pay yourself first. Absolutely, Raymond.
Do not steal the peas. I have money going in a checking account when I get paid. So if I have a policy, then do I get that money direct to the policy? So yeah, if that money, for example, is money that you want to put into a policy, then you can just set up automatic payments with the insurance company and say, hey, draft $500 a month or whatever it is from this account. Hopefully that answers your question. Late, but I made it. All that matters is that you're here. Again, if you guys are here with us, go ahead and like this video. Thank you so much for all of your support and listening to us today. Wish I had been taught this years ago. You know what? People tell that tell us all the time.
I wish the same thing. There's a lot of families out there that get this downloaded into them from birth.
Yeah,
that's what I hope to do for our daughter, is really teach her about finances, because we learn finances from our households.
Exactly. And just keep in mind too, don't beat yourself up too much, because when the student is ready, the teacher will appear. And maybe it wasn't meant for you to know this information before, but now you are ready to digest and consume this information so that you can do something about it.
Yeah.
At what point do you figure that you will no longer need the bank for financing? I assume we're talking about the physical bank. Honestly, I'm gonna
right now, as soon as possible. Right now, we don't have any debt ourselves, and when we do utilize funds for financing, we go to our family bank.
Yeah. However, there are levels to this. So if we're talking about from a consumer standpoint, as soon as possible,
yes,
we need to be getting rid of it as soon as possible. But if we're talking about leverage, if we're talking about business investments and things like that, then we may use the bank for different opportunities that make sense to leverage debt, but not from a consumer standpoint, just to make sure that we are leveraging debt to make more money. If you borrow money, that's what I'm saying. So there's levels to this. Let's see, what else are we talking about? So how do I go about getting another policy? And what would I use the money for? So
you shouldn't get another policy if you can't answer that question. Because you'll just have a life insurance policy just sitting there. You already have one for emergency fund that I don't think you're fully utilizing. So utilize the one you have so that you already know going into it how you're going to utilize the second one if you do get it.
Mm-hmm. Yeah, but if you are, for those of everybody who's watching, if you do feel like you're at a point where you can get another policy, the question you should be asking yourself is, if I'm sitting on funds that nothing is happening with them, then you really need to start having a conversation with yourself and saying, can I duplicate this again next year? So if I'm sitting on 10 grand right now, do I think that I can have 10 grand again next year? And then the year after that, and then the year after that. And if you can answer that question, yes, then it's probably time for you to start another policy, especially if you've maxed out your existing policy. Mm-hmm. However, if you say no to that answer, then we would say you might want to take a little bit of time to continue creating more cash flow or creating opportunities so that the next policy is more affordable for you. Yep. If that makes sense. I would like to contact you. How do we do so? So we right now do not do any one-on-one calls. If you want to become a client of ours, then you need to click on the link in the description and check out our masterclass and apply to become our client. Thank you for clarifying. No worries. How will Security Mutual Life assist me in setting up a policy that best suits my needs? So
when it comes to banking, there's multiple different companies you can use. There was one person using Mass Mutual. We also have people use Security Mutual Life. What's other companies? American United Life, Ohio National Life. There's a myriad of different companies that you can work with for setting up a policy. It's not about the company, is where I'm getting. It's about the person that's setting it up for you.
Yeah. So to make sure we're clear on that, how will Security Mutual Life assist me? Security Mutual Life isn't going to write the policy for you. It's all about the agent that is licensed to work with Security Mutual Life. So it would be ourselves. It would be a member of our team that will sit down with you and create a policy around the financial goals that you are targeting. So it's all about the financial goals that you're targeting and how much you can afford with the policy. We marry that all up together and make sure that we create a policy that fits your specific needs. What's next?
Did you say daughter? Yes. We are expecting a daughter any minute now.
Any day now. Yeah. So we are due at the end of the month. So, hopefully we have a baby girl coming. I'll show you guys. I've been able to hide my bump. Let's see. Can you guys see it? There's a baby girl. So yes.
What is the minimum policy you offer? Why can't someone have a policy with the blood sample?
So hopefully we can answer that question. Reflections, if you wouldn't mind clarifying for us. So what is the minimum policy that you offer? Right now, the minimum to get started is $6,000 on an annual basis or $500 a month. And why can't someone have a policy with blood sample? Not really sure what you mean by that, but what I'm going to say is there is a medical exam that's required. So
to make sure your insurability.
Yeah, so the insurance company is going to check your health because they got to make sure that you're healthy enough. So if you are thinking about maybe having to have some sort of medical exam, you do have to provide a blood sample and a urine sample and do blood pressure and things like that. So hopefully that answers your question. I would like to get a policy for my nieces and nephews. So absolutely, you can work on the generational or the lineage, so to speak. However, there is a hierarchy that needs to kind of happen to make sure that the parents are insured, you're insured first, just to make sure that everyone is covered before you start reaching out to the kiddos. Or we have to have a really extensive letter explaining the reason for you skipping generations and wanting to insure other people.
One question from for I Candy. I think I read your blog that your first policy was 10K and you stopped funding year 5. Does that mean you are not required to make annual deposits after that? We are going to continue making deposits. The insurance policies is separated into two different parts. There's a base premium that pays for your death benefit, and then there's the paid up addition rider, which we use for cash value. So the cash value, we just stopped after 5 years, but we're still maintaining our policy with the base premium.
Yeah, the two parts that go into it, base premium, paid up additions. So we paid $10,000 for 5 years straight, and then the rest of the time we are only paying $4,000. So the next question is, can I buy a policy for a child in college? Absolutely. And can I still own the policy? Absolutely. So when it comes to owning a policy on a child, you own the policy, you are the owner, the insured would be the child, and then you would be the beneficiary on the policy. So that's how that works. And then at any time, if you decide I want to transfer this policy to my child, you can do an ownership exchange and they can then own the policy if you want to.
Cash flow, cash value, come get some. There you go.
Thank you guys for all the congrats. I appreciate that. Let's see what else. Something about my wife. What did I miss? That will also help me as my wife to be a personal baby care assistant. We'll let you know how that happens.
I plan on investing in a franchise. Would it be great to wait until I get a policy and borrow from the policy, not the bank as far as loans? I don't have all of the cash. If that can provide you cash flow for more than what you are borrowing, that's always the name of the game.
It is very important. Always make sure to just evaluate your situation. So again, is cash flow going to be generated? And if that's the case, absolutely.
And honestly, the only difference between a life insurance company or insurance company and a bank is a sign outside the door. They all want money. They want our money. So that's the thing. Let's not give them no more or no less than what we are planning on giving them in the first place. So if it is an opportunity for you to make money, make money. Always go for the money.
Yeah. And Antonio, you're talking about, can I insure my mother? So what I want to say, let me back up when I'm talking about being able to insure other people. So first thing is you have to have something called insurable interest, meaning would that person be at financial hardship should something happen to you? So for your nieces and nephews, you would have to make sure that you establish some sort of financial hardship. Like if your brother or sister were to pass, are you then financially responsible for the children? If something were to happen to your mom, are you financially responsible for the family in some way? So you have to prove that insurability first. The insurance company isn't going to just let you insure everybody. So there has to be a reason why you're insuring these people. So hopefully that answers your question and helps you understand the approach that you need to take when it comes to insuring family members, for example.
Cindy asked a great question. So when you stop paying PUA, does that affect your cash value growth? Well, the whole point of the PUA is to build up, have the cash value build up to a point to where you can just pay the base and it just continue growing.
Yeah, but the base is really what drives the policy, regardless of what people say. So for us, it's all about making sure that we use the PUA in the years that the base isn't growing cash value. So we're just using the PUA to offset those years. And then the minute that the base starts producing its own cash value, we take the paid up additions off, because it doesn't make sense for you to continue paying the paid up additions when the base is contributing the cash value that you need.
Yeah.
So there's a little trick and nuance for you. But for us, we're trying to get you the biggest bang for your buck, so that you don't have to just inject a whole bunch of cash to make the policy work.
Yeah, because like Carmen said, initially in a traditional whole life insurance policy, there's no cash value in the first 3, 4, 5 years. So the point of the PUA is to have that sit there and have cash value in those years that we don't have it growing from the actual base policy.
Yeah. I am disabled. Do I still qualify? Depends on your disability. It's always, you should always entertain, because it just depends on what your health conditions are. I'm 54 and outside of the US. I'm new to IBC. What is the first thing you recommend I do? Find a company that has the cash value mechanism that works similar to what we're talking about in your country, wherever you are. Can you own a policy for a 29-year-old child? Absolutely. Our parents own policies on us. So
that's the banking system that we tap into.
So you got big babies, that's all it is. Let's see what else. We want to make sure that we try to get to everyone's question. If you put a lump sum into the policy, how long do you have to wait to borrow against it? 30 days. Let's see what else. If I set a policy at $6,000 minimum, can I still add as much as I want? No. Good question. There is always going to be a limit to how much you can add to the policy. And depending on your age and depending on how much you're trying to contribute, that's going to be a factor in how much more you can put over $6,000.
Yep.
Can an LLC have a policy on an individual?
Yes, it can. But if something, the LLC owns that policy. Now, again, we're not tax professionals, but if LLC owns that policy while you are, and something happens, then you have to pay taxes.
Yeah, absolutely.
But refer to your tax professional.
You just got to know what you're getting involved in when a business owns a policy. Can you insure a newborn grandbaby? Absolutely. You better believe this baby is about to be insured when she is 15 days old. That's when you can start insuring individuals. I have a policy with New York Life and was wondering, is it possible to change the PUA rider?
Not after the policy is in force. New York Life is a great company.
Yeah, double check with your agent. We don't know the stipulations or in which it was created, but from what we know, once the policy is enforced, there's not much changing going on. Can I borrow from one policy to fund another to increase? Oh, look at you, Jeremiah. I like how you're thinking. So we're talking about cash flow. If you have cash and you own the policy,
you should refer to your agent.
That is creative financing, my friend.
You should refer to your agent.
Okay, sorry. Can I get a policy without a blood sample?
Oh,
good question.
Yeah, it depends on how much that policy is for. It depends on your age, the amount, your health, and it really depends on your health and the amount of death benefit for that policy.
Yeah, what Darius is talking about is how much you qualify for.
Yeah.
So if $6,000 is going to buy you over $500,000 in death benefit, then you're probably going to need a blood sample. If it's maybe a little bit lesser of amount, then maybe not. You may not need to take a medical exam. If I move to another country or live outside the United States for 6 months, can I still get a policy? Yes. We've lived outside of the United States for over a year, and we can still get policies. So yeah. How do you know when the base is producing the cash value as opposed to the paid up additions?
You look at your illustration. Your illustration will let you know. And the way we design our policies is when we get to a point to where we pay the premium and the premium is doubled in the cash value, or we get 100% of the cash value back, then that base premium is doing exactly what we needed to do.
And let's see, can my company take out a policy on me?
That's the LLC.
You're an asset, so why not? Financial hardship, you are an asset to that business.
And if something was to happen to you, then your company would be at a financial hardship, financial loss. So it's good that they insure you, so they can take out a policy on you.
Your strategy seems to be a little different, not wrong or right. Do you stop paying the PUA after 5 years? Yes, we do. Let's see, everyone hit the like button. Thank you so much, Jonathan, for the love. Yes, everyone hit the like button. Let's create some engagement. Thank you so much for the love. The premium would be your age times 10. Yes, we can say that.
All right, last question.
Yeah, last question. And
what is the time frame from opening a policy, funding a policy, and withdrawing a policy? Withdrawing. We're not withdrawing. We're not withdrawing. So the time frame for withdrawing should be never. But the time frame from opening a policy and funding the policy, well, you open the policy and fund the policy at the same time.
Well, so basically what I think you're saying is from the time I start to the time I can get the cash, let's just say, honestly, it depends on the person. We can say 4 to 6 weeks roughly. And the reason why we say that is because it depends how thorough the underwriting process is.
And how responsive you are.
Yeah. So from the moment that you start your application and then we submit everything to the insurance company, they may have 50 questions that they need answered. And if you're able to respond to those questions very quickly, then maybe we can get you out the door with a policy soon. But if you're not responsive, or if the insurance company just needs a little bit more thorough investigation of your health, that could take, a week or two. So
yeah, I've gotten policies in I've started a policy process and gotten a policy loan within 2 weeks.
Yeah.
Because I already knew what to expect and I gave them all the information up front. So
exactly. But we've seen, especially if you're military, we've seen the process take 6 months.
Yeah, because military, they take forever to get their medical records.
The VA can be challenging to work with. So just to give you a little bit of perspective there. So yes, Antonio, thank you for correcting. That is it, ladies and gentlemen. That was the last question that we were taking for today. Thank you so much for joining us on this Wealthy Wednesday. And thank you all. Wishes. We just appreciate everyone for hanging out with us this evening. Thank you for the fellowship, for the questions, for the support, for the likes on this video. Go ahead and hit the like button if you haven't already.
Hopefully this time next week, I'll be meeting my daughter for the first time.
Very exciting. So great stuff. Thank you guys again. And make sure that you check out the next video where we talk about how infinite banking works. If you have any other questions, if you want to become our client, go ahead and click on the link in the description below so that you can watch our masterclass and get started. What are you guys waiting for?
Remember, use that in between your mind to earn cash flow.
Yes.
Cash flow is the king.
Exactly. So remember to own your own lifestyle.
Or someone else will.